to Next Level Humanity podcast, everyone. Here is Nevşah, and I have our dear friend, Sunmeet Jolly. He is the founder, CEO of Jolly VC, which I'm happily a part of as an LP. Hi, Sunmeet, how are you?
Very good. How are you, Nevşah? Thanks for having me on the podcast.
Great. Thanks for joining us. As I was telling you before we started the podcast, I was at an investor event today in London. There are lots of events happening. June is kind of like the time of the year when you have like 5 events a day. So yeah, last year I was like running from one event to the other. Now I'm taking things slow. I was just in one launch event, which was great. We had some VCs from Singapore, from US, from UK, and they were speaking about how US, especially on AI, how the US startup world has been growing and expanding, which is amazing. So you're in the Bay Area and you founded Jolly VC, I think a year ago, right? A year and a half ago?
Yes. So we formed the fund in January 2024. That's when the fund was launched, and we did our first close for the fund in end of March 2024. So since then we've been fundraising as well as deploying the fund. So we've already invested in 9 startups in the artificial intelligence, SaaS, B2B SaaS, and IoT space. And yes, Silicon Valley is hot right now. People from all over the world come here. We have so many big conferences with 7,000-8,000 people, somewhere 3,000 people. And then the smaller meetups, 300, 400, 500 people meetups on a weekly basis. Last week, I was on a panel discussion at TechX in Santa Clara Convention Center. And the organizers for that came from London. And a couple of VCs along with me. One was from Switzerland and another one was from UK as well. And they flew down.
Yeah, I mean, if you're a VC and if you're an investor, US, Bay Area has to be a target area. Which is very big, and things happen there, and we'll dive into that. But I'm also interested in your story before Jolly VC, like your journey and what have you been doing. Let's start with your journey. Let's hear a little bit about your journey up till now.
Yes, so I'm an immigrant to the United States. I'm a naturalized citizen. I came to Silicon Valley 25 years ago. I was born in India, and I did my engineering studies and management studies in India. And then I worked for Hewlett-Packard in India for a while, and I moved to another country called Muscat, Oman. And Muscat is the capital of Oman, near Dubai. So I lived and worked there for about a year and a half before I came to United States in 2000. So 25 years in the Bay Area. Initially, I was an operator. I did 11 years of corporate sales. 6 out of Fortune 500 were my customers. Did about $200 million plus sales for those companies. Many of those companies became multi-billion dollar. They publicly listed on stock exchanges. A couple of them merged together and were sold to Capgemini for $4 billion. So, I saw the corporate world, how multi-billion dollar companies are built and they operate. And I did sales for them as a front-end guy, meeting CXOs on a weekly basis and selling millions of dollars and hundreds of millions of dollars of stuff. That was the operator life of mine. And then I also founded a startup where I have 2 US patents granted in social networking area. We run that startup in a bootstrap fashion for a while, and then we kind of put it on hold because it was still bootstrap, and my focus shifted on the fund. So we went to an accelerator called VC Lab, which is the #1 accelerator in the world to launch VC funds.
Yeah, it's brilliant,
you know about it because you are in many funds.
Yeah.
You've invested in many funds.
I did finish the LP. I did finish the LP Institute because I wanted to, because we now have a family office over here, NevCap, and an accelerator. We keep on investing in VCs, also multiple startups. I wanted to dive deeper into the process, learn more about how to, like the ins and outs of being a better investor, and how to choose VCs. And I think there's a lot to learn from Adeo and his team, and the whole. It's just brilliant. I mean, I was speaking to one of my co-founders, and I was telling them, whenever we decide to build a VC, we are finishing the VC Institute first, because I have been hearing about them over and over again. And I have a couple of friends. You met, Çiğdem and Arzu, and they are also friends from Turkey, and I'm also part of their fund. And they suggested me to finish the LP Institute.
They were in my cohort.
Yeah, I know. We spoke about you as well, and Çiğdem was. Sunmeet has been in Bay Area, and he's been in this space like forever. Everywhere you go, you see him, and he's totally in charge, and he's on top of things. And yeah, I heard some good things about you.
Yes, and thank you for joining the fund. You were our one of the early joins this year in 2025. I know first week or second week of January, when I came from CES, we had a Zoom call, and you pretty much made up your mind to join the fund. And thank you.
Yeah, because I'm going to ask you that question, because your investment strategy is a strategy, and I think it's a brilliant strategy. And I think the reason why I decided to invest in the fund was the companies you chose, as well as the investment strategy. So maybe you can talk a little bit about your investment strategy, and also with your experience and in the Bay Area, and how you choose the companies you choose, and maybe give some specific examples of the companies Jolly VC invested
Absolutely.
in.
So before becoming a VC, I was an angel investor for almost 9 years. So I started investing in AI before it was a very big, hot thing. Right? So in 2019, when ChatGPT was launched by OpenAI, that's when the real AI came into the hands of people. But even before that, there was Siri, and we were using AI in many forms, but it was not that hot. But I started investing way back in 2016, and I had multiple IPOs in that space. So as an angel investor, I made 44 startup investments. Those led to 5 outcomes at $1 billion plus. A couple of them are unicorns, they are still active. And in one case, we've had partial buyback. In another case, it's a unicorn, $1 billion plus, and they want to go even bigger before they do IPO. But we had some IPOs and exits, and that fund is returning. The angel money that I played with since 2016 has been returning 38% IRR. So 38% IRR.
That's an amazing
3x
number.
Back in the bank already. And 25 out of 44 still active. 7 exits have happened, bringing 3 times the money, entire fund invested back to the bank. So I kind of tasted the blood with my own money. And I said, okay, and a lot of friends were asking me, why don't you up the game? Why don't you build a pooled investment vehicle where we all invest?
Because it's obvious that when you see the projects and when you see founders, you can see their future in a way. It's like you have that vision.
Instead of writing a $10,000 to $20,000 check, now I write $100,000 to $200,000 checks. Right? That's the difference between a VC. A VC is a pooled investment vehicle. It's a Delaware-registered limited partnership. And just like you are a partner in Jolly VC Fund 1 LP, we have now 40 total partners in the fund, and we pool the vehicle, pool the investment, and it's the same amount of time and money. Time and effort required to do the research to write a $20,000 check, which is to write a $200,000 check, right? So but now I have doubled my time. Now I'm doing it full time, and I'm seeing a lot more deals as a VC, and the opportunities to invest as a VC are much larger than the ones available, which were available to me as an angel. So in many cases, angel can only enter a pre-seed or seed, while Series A becomes bigger and Series B becomes even bigger, and the check sizes become larger in those rounds. But with $200,000 average check size, we can get into any Series A. We just have to tell the founders we'll be helpful, take our money, get us into the hot round, and we have connections. I have 24,000 LinkedIn followers. I'm ranked number 1 on Crunchbase in San Jose, California as individual angel investor. So I get to see a lot of deal flow. Almost all accelerators invite me for demo days. This week, in fact, we have Plug and Play's 3-day conference going on. I'm invited there. In September, I'll be flying to New York for Young Startup Conference, another 2-day conference in Javits Center. When they did one in Computer History Museum here, I was again a featured VC there. Currently in September, again, I'm listed on their website as a featured VC. So we see a lot. Doing this for 8 to 9 years, I'm in those databases, promoted by accelerators, and conference organizers invite us for speaking on the stage. Last week I was at TechX conference speaking on the stage along with, as I said, other 2 VCs. One came from Switzerland, one came from UK, and the organizers were also from UK. And they did a conference here in Santa Clara Convention Center. So being there is very important. Networking is very important. We get to see a lot of deals. I see about 1,000 deals a year, and I select 10 to invest in. 1% of what I see per year.
Yeah, I think as a VC, the most important thing is, as a startup as well, but as a VC as well, being seen, and you being on stage, and you being in the environment, and you being on those events. Many founders who feel connected with you and with your strategy, with your investment strategy, probably do apply to Jolly VC, and you have hundreds of deals waiting for you to earn 1,000. That's an amazing number. So how do you? So you do have a team, and you also work with others team. How do you decide, and how does the process? Can you explain more about the process if there are some entrepreneurs listening? Because there are a lot of entrepreneurs, first-time entrepreneurs, second-time entrepreneurs listening to our podcast.
Yes.
I think it's important to underline the whole process as well.
So doing this for almost 9 years now, and also being an operator in multi-billion-dollar companies, I kind of developed a checklist, which is like a 13-point checklist where we kind of when we look at a deal coming from entrepreneurs, we try to see that majority of those points are there, and so large addressable market for whatever they're doing. Bottom line benefit to the customer. Why are customers? So I rarely invest in idea stage. I want to see customers and revenue growing, because that's where I really study why is this set of 10, 20, 50 customers using this product or service, and what is the benefit they are deriving. And at that point, the founders can also talk about how they acquired the customers. How big is the addressable market? Like in one case, we have a company from MIT which has 100 small banks and credit unions as their customers. And they say there are 10,000 potential in the United States alone. And then there is Singapore, there is London, so these guys implement agentic and generative AI for small banks and credit unions. And they have 100 customers. But then when you have 100 customers, there's a lot that you can talk to the founder about. So we participated in their Series A round in that case. In another case, we just invested 2 weeks ago in a company, Sprouts.ai. They are funded by Accel Partners, one of the top funds in the world. And they have 65 customers doing $2 million in revenue. We participated in their seed round, right? This is before they go into series. But there's a lot you can talk to founders when they are in the business. They are already running for a few years, and they can tell you exactly. So what's the benefit the customers are deriving? What kind of competition exists? Who else is there that they compete with to win business? That's another analysis. Who are the co-investors? Like in many of these cases, there are big marquee investors. So that shows founders hustle. If you have collected $6 billion of investment from Accel Partners, which is running just one of their funds, is $650 million fund from where they've written. That means the founders have worked hard to get that.
Yeah, you have a higher chance.
So they have a much higher opportunity to bring in a lot of other VCs, as well as they are already doing 2 million in sales. They're at 5 million, they break even. They become profitable after that. So there's a path to profitability. And they can sacrifice profitability for growth by hiring more and getting more capital. But there is a path to profitability. There's a 70% gross margin in the business. So that's another thing to see. What is the gross margin? What is the burn rate? What's the net margin? What's the money available in bank right now when this round finishes? Do they have 12 to 18 months of runway? Right? So those kind of analysis and intellectual property, what distinguishes them from the other set of competitors or big incumbent.
Yeah. I mean, the reason why I like your strategy and why I liked your strategy in the first place was that your strategy is, I think, around decreasing the risks, because we all know investing in startups is the most risky investment. I'm an investor. I'm invested in many things, real estate as well, but this is one of the high risk investments. And your strategy is, with all these information, with all this analysis, and with what you're focusing on, you're actually focusing on decreasing the risks as much as possible, making sure the company got investment, making sure the company has revenue, like making sure the company has a higher chance of growing, and just staying away from more risky companies like Idea. You don't invest much in Idea. You want to see the results, and that's like what I like most about Jolly VC. So you have everything.
Has some ideas. They're all software engineers. They're doing something on Saturday and Sunday, building something while they're working in Google or Meta or Apple or all these companies around, because they're engineers, right? And they're ambitious, and majority of them are immigrants or from immigrant parents. So they are ambitious. They saw that how Silicon Valley was built, and so they generally do something on the side. You cannot invest in everything, because many of them will never leave their high-paying jobs, but you want to be friends with everybody. What if that idea really gets the initial funding and then they are in business? So you want to be, we never say no. I only say absolute no to guys who are completely out of thesis. Something that we don't invest in, something that we don't understand, we say no to. Or something that's not venture scalable. I tell them, this is not venture scalable. This is like too small an idea for a personal business. But in other cases, we always stay friends and say not now, which means get your first pilot in, get your 5 customers, get to $500,000 revenue, and then let's stay in touch. That's
a brilliant strategy. Just saying not now, instead of no. Not now, because we can, but I first want to see the results, because you are trying to lower the risk. I think that's brilliant.
There is a company that I'm just talking about. Yeah. Last year when they came to me, I said not now, because I was funding Posh.ai, which is the MIT, the small bank security units. That was a priority for my fund at that time. And I said not now to them. But this time, few weeks ago when they approached me, I had more money sitting in the bank, and I said okay, and then the other deal was done, and I said okay, now it's the time to. And they were running a seed round, and it was almost 70% filled. So it's the right timing when it happens. So we don't say no. We say just keep building your business. Any other help you require, you want referrals from me, I'll give you referrals. I'm willing to
and keep on informing me and keep on sending me
at a certain point in time. But we're going to be investing till 2028 from this fund. And just before this fund closes, maybe we'll have fund too, right? Who knows? So I'm in this business. I'm doing it forever now. So I love to do it. I love to talk to founders. I love to see the energy of building something new. I can talk to founders for hours. Every day I take multiple calls with founders. So yes,
and you stay in that space. I think that's like you're kind of like how it felt for me. I think speaking with other VCs and some of my friends who live in Bay Area, my idea about Jolly VC was you're kind of like your first aim is sitting at the heart of Silicon Valley and just watching whatever is happening and just being at the heart of things, and because then things happen. because then you see opportunities, and I think that's a
Good thing is that
brilliant
we get
strategy.
opportunity
Literally
other
being
parts of
there
US as
physically.
well. So we already invested in a couple of companies. One is in Boston. So MIT guys started in a dorm room.
Mm-hmm.
Right now they're doing $15 million in revenue. And another one is Linco.ai, which is in Michigan. So they moved closer to their customers. They started in the Bay Area, and they are an international team. They have employees all over the world, and their customers are all over the world. But they move closer to the auto industry, which they are focusing. They use computer vision to find manufacturing defects before stuff is shipped out to customers. So that reduces the cost of returns, etc. So they moved closer to their customers in Detroit, Michigan area, and so we are invested there. So we get opportunities from all over the world. We have enough connections and brand to do that. We only invest in US domiciled startups. So which means you can have a team worldwide. Founder could be living worldwide anywhere, but it has to be a Delaware C corporation, preferably, because we also we want to make sure that you will be well funded till the time you need funding, subsequent rounds, and a lot of capital is available in the United States. So if you want to get big checks from bigger VCs here in the United States, you will at some point have to build a Delaware C corp. And that is why. But we have geographically spread out portfolio companies. We have one in Austin, Texas, Boston, but there are a lot of them in the Bay Area itself. Many of my founders are from other places.
And I think having a Delaware C corp over there is kind of like a +1 to start for founders, because I have startups I'm supporting in Turkey and also in Europe, in UK, and they want to come to US, and I tell them to first build the Delaware C corp and then start connecting with VCs, which is especially for the foreign founders who are listening to our podcast right now. Why is building a Delaware C corp important for the VCs and for the investors in US?
The laws in Delaware are very friendly to investors. There is less friction. Things are very easy. Like my fund, I've never been to Delaware as a state. Right? 25 years in the US, I've been to New Jersey and so many states around Delaware. But my fund is domiciled in Delaware because VC Lab recommends. They have recommended that you should form a fund in Delaware. It's very easy. To pay the franchise fee, I just go online and pay $300 per year, and that's it. We have a well-established service of process and companies out there which collect your mail and forward the mail or do incorporation stuff for you and everything. So it's just a very popular choice amongst investors for decades now, and they have made themselves so friendly to investors. Operating a company or a fund. In my case, I have 3 companies in Delaware because a fund is 3 companies. There's a LLC, which is the management company, and then there's a general partner entity, which is another LLC, and then there's a limited partnership, which you are a part of, right? You're a partner in the limited partnership, which is the pooled investment vehicle, which actually moves all the money in and out of the fund. And the other 2 entities are governing entities. So all 3 companies are running in Delaware for me, and I've never visited Delaware. So
we do have one company in Delaware as well. It's kind of like the investors are demanding right now, especially for the past 3 to 5 years. They are demanding, especially for foreign founders, if you want to come to US, first build a company as a Delaware C corp, and then we can talk and we can.
So ease of doing business laws that are more investor friendly than many other jurisdictions in the United States also. Like in California, the franchise tax fee is high, and then there are certain laws which are not as investor friendly. And by kind of standardizing on Delaware, one thing that the VC industry has made sure is that we don't have to spend extra lawyer time in doing due diligence, let's say if you were in Missouri, then I have to worry about what laws am I dealing with. I have to do extra due diligence on that software, on that portfolio company, and laws of Missouri as to whether they are investor friendly or not. So it checks that one box, because everybody kind of understands that Delaware is the most friendly state, and nobody wants to add one extra risk element in their decision. There's already so many things, customers, gross margin, net margin, path to profitability, fundraising momentum, sales momentum, intellectual property, competition, team. So many variables moving parts, and you want to just avoid the one extra. So
the one extra. At least let's make this one easy.
Makes life easier.
Yeah, thank you very much. I think it was very informative and also inspiring conversation. So how can LPs or angel investors reach out to you, and how can entrepreneurs reach out to you if they want to speak with you and meet you?
Well, first of all, we are in a regulated area. So SEC regulations are that you have to be accredited investor to invest in a VC fund like ours. And laws applicable to other countries also. You got to follow your local law. That you should be allowed to invest in an instrument like this from your home country. So if you are in UK, then you should follow the local rules, and as well as if you are from other parts of EU. We know that European Union, there are some countries where laws are very strict. They literally do not want general solicitation of any sort. You have to know the person, and you have to be like in your case. You came as recommended from LP Institute. You were part of VC Lab, and they introduced us, and so it was easy. And you live in UK, which is probably more friendly to these kind of investments.
Yeah, and because I'm an accredited investor, I think that also makes things easy.
But I just want to make a statement that this is, if your country is close to or does not allow making these kind of investments, that this is not applicable. But if you are an accredited investor and are allowed to make an investment in a fund like ours, which invests in private startups, then of course you can reach out to me on LinkedIn, and we will assess, and we will for the time that we are still open and taking in more LPs, you can reach out, and then we will establish a kind of relationship with you over several meetings and explain to you how this whole thing works.
And how about entrepreneurs? So how do entrepreneurs?
I'm open to entrepreneurs. Apply. Yeah, they can reach out to me anytime. There's no laws governing. They can pitch to us, and we decide that based on how close they are to our thesis area. If they are doing more than $1 million in revenue, I put them on a higher priority for a Zoom call, because we want to capture them. Invest early. If they've gone beyond, like they're doing Series B, C, D, then it's again too far. We are a seed and Series A fund, and being a seed and Series A fund, there is a certain range in which we play. We don't go too early at idea stage, but we want to be a part of a deal and be invested when you show significant traction in your area. You've captured a certain amount of customers, you know the game, you've played it for 2-3 years, and you know what's working, what's not working for you. And from a go-to-market strategy perspective, there's a lot to discuss at that point.
And then one last question is for our entrepreneurs, which they probably would like me to ask you. You have been in the startup world for a long time, and you've met all these amazing entrepreneurs. So what makes an entrepreneur successful? If you were to say that maybe 3 things that makes an entrepreneur successful, what are the signs of an entrepreneur succeeding? Is it dedication? Is it discipline? Is it the idea? Is it the team? Like if you valued? Like, what are the first top 3 things?
Ideas sometimes change. I just made my 50th investment in a startup. So 44 as an angel and 6 I've done from the fund directly. We also brought 3 of the deals from angel at my cost into the fund. So fund owns 9 companies right now. But we've done 6 direct investments from the fund and 44 as an angel. So 50 total I've done. And in many cases I've seen that the original idea that they started with, they pivoted. But they still kept the same cap table, and in one case they also changed the name, but they kept the ownership the same. They never started another company, and they actually went IPO after multi-billion dollars at a multi-billion dollar valuation. So sometimes we have also seen that the team that starts with that idea, that name and everything stays the same all the way to becoming a unicorn. So both these things are very, very valid. So idea alone is not important. I think the most important thing is the founding team that doesn't give up. The ambition to build something big, to start dreaming something big and working in a manner where you are building something big. You want to build a unicorn.
And not giving up, sticking to your vision.
Sticking to it and doing everything that's required for it. If it's required that you raise a lot of capital, then you are raising a lot of capital. If it requires, that you sell to all geographies in the world or maybe focus on one country first before moving to others, then you're doing that. You're talking your vision and you're executing on that. You're not just daydreaming, sitting that on Sunday I will quote something and I'll become Steve Jobs. That doesn't happen, right? So you've left your previous jobs or you are a repeat founder. In many cases, we have repeat founders who already made a lot of money selling previous companies and they're doing something new in AI now, right? So they are all a great bet to look at because they have experience, they have connections. They're just building something new with newer technology, and they've learned for many years. But in some other cases, we have absolute dorm room guys, like in Posh.ai. They started in an MIT dorm room. It was an internal research project. Started consulting with banks and credit unions, and the banks and credit unions themselves started giving them money to build the product. And ABA became an investor. American Bankers Association is an investor, directly as well as through some other funds which they've invested in, so Canopy Ventures and all. And they started in a dorm room without experience and they've built $15 million in revenue and they're growing. Like only 100 banks, with only 100 banks they're doing $15 million. There's 10,000 potential banks in the United States alone. They haven't even gone outside the US.
Yeah, I mean, it's like knowing your target, knowing your client, knowing your product. Who you are building
this is our
for.
product, or this is a set of products, and this is the market, and they are just focused on doing that. And dreaming something big and executing on it. Execution. Whoa.
Yeah, and I think focusing on a niche market and really understanding what the problem of that market is, like what would be the biggest solution, everybody in that market would pay for. Yeah, what are they? Why are they suffering? The areas?
I just don't invest on their dream of doing it. I invest on what are you doing to show me what you've done. Build on that dream.
Yeah.
So from the start, I'm not there at the start. I'm there after a few years. Right? Like Decile Group, we invested in Decile Group because when I went to VC Lab, it was cohort 11. 4-5 years they've been running. They had already had hundreds of VCs out. And I asked Mike and Adeo, is it investable? Can I invest money in Decile? He said, yeah, when the round opens, we'll let you know. So my first investment from the fund was in Decile Group itself. And this is before Tim Draper, Jason Calacanis, and all the big boys joined. So we were on a safe note. It was the first investment Jolly VC made was in Decile because I knew I'm a paying customer. I know the business model. They are number one in VC acceleration in the whole world. Right? And they have support of Silicon Valley and community beyond. And look at the entrepreneurs. You have seen how hard Adeo Ressi and Mike Suprovici work.
Yeah. They're amazing. Yeah, you literally find amazing founders and entrepreneurs who are
When we see
dedicated,
that
who know their
hustle, we
thing,
see
who have been
our
growing
business
their
being built.
company,
Yeah.
clear,
Sorry to interrupt.
yeah, clear businesses and lowering the risk, I think. Thank you for an amazing conversation. I enjoyed every minute of it. I think people who listened and who are watching from YouTube learned a lot. Is there anything you want to add?
No, it's great. People who like what we are doing, they can reach out on LinkedIn. Sunmeet Jolly, my first name, last name. Jolly.vc will also lead you to it somehow. But yeah, send me a I almost accept every connection, and I try to converse on the direct message on LinkedIn. If there is business that we can do together, whether you're a startup or whether you're an investor, whether you're an angel investor or VC who wants to co-invest, a lot of times VCs share deals with each other. So we also want to know other VCs, what they are investing in, what are their good deals. Sometimes our founders want more VCs beyond. So if I'm putting a $100,000 check and the founder says, I need to fill my round, can you introduce me to other VCs? We collaborate with other VCs too. We want good for the founder. So reach out if you are an angel investor or a VC. Let's share deals. Let's see if we can work together in many different ways besides just being a founder or a LP. Because founder and LP is one thing, but co-investing, collaborating. A lot of time people reach out. They want a job in a new startup. I'm fine. I introduce good technical talent to my startup founders as well. People reach out, they want to give marketing services. They are chief marketing.
You're a powerful connector.
I'm a super connector. I like to help everybody that I can.
Thank you again. And thanks to all of our listeners and everybody who's watching on YouTube. If you like the podcast, make sure you subscribe, and I'll see you in the next episode.
Thank you, Nevşah.